Hello guys, so in today's video I will be explaining how you can trade for extreme RR, and this method can be applied on any pair. So first we start with looking at the pair we want to trade. What are the times during the day where it starts to move? So this is showing us that the least volatility, for example on Euro Yen, the least volatility is at 6 a.m. and then it starts to move until 10. And in the afternoon, you can see the least volatility was at 13 and then it starts to move until up to 17 hours in the afternoon. So this is like based on IC markets. So it's like a CET plus 2 or something like this. But anyway, you will have like these data according to your server broker time, okay? So once we know, okay, now we are interested in starting to trade at 6 and at 13. So at 6, what we will do, we will go to the 1 minute chart here, and then we will start with the 6. So here we have 6. Now at 6, we will look for like 1 hour. We'll let it play, and then we will see what was the range of the 1 hour. So after the 7, like from 6 to 7, then we will start to trade. The idea is, if we break first the low of the candle, like here, then we will be only interested in buying. And if it breaks first the high of the candle, we will be interested in selling. So here it just went below the low of the candle as here, and then moved directly up and formed a fair value gap. Now this action here shows us that the market wants to go up, especially that it didn't like go too much below. So it's like just barely pinned below the low of the candle, previous candle, and then formed a fair value gap and reversed. So this is a very good indication that the market wants to go up. So what we will do, we will be entering after we close above the bearish fair value gap, because the gray fair value gaps are bearish, the green ones are bullish. Now, if you want the indicators and the templates I have here, you will find links below this video to explain how you can get them, okay? Okay, so here, as you can see, we are only interested now in buying. So once we do this action here, like barely breaking the low and then going and forming a fair value gap and closing above it, this is a good place to buy, okay? So we have like buy, and then our stop loss is below the low, so it's like 6 pips or whatever it is, 5.7. Now the minimum target will be determined after we break this high. So this is like we have to wait for this high to break, and then we will know the minimum target, because after we break this high, we will have like here it's telling us that the minimum target is going to be like this level here. So we will know that we have like 5.8, and then at least we have to wait until 16, 17 pips profit. But this is the minimum target that we have to wait for, and it should be closing above this target. So 38 pips target and 5.8 risk. So we have to wait. We have to let it just work its way until it reaches this minimum target. Now it reaches this target. Now what we have to do is, after we reach this target, we have to use the bullish fair value gaps as our trailing stop loss. So once we reach this, we will have to use, like, we will move our stop loss from here to here. So now it's a stop loss in good profit. So even if we hit the stop loss, so 5.5, and then here we have 28, we are still like in like 1 to 5, 1 to 6 RR. And we will let it run, and every time we have like a new bullish fair value gap, we have to use the bottom of it as the stop loss. So this is another stop loss. Now here, as you can see, it broke external liquidities. Why do we call them external? Because they come from before the candle that we are trading. This is the candle. So if they came from here, they are external. If they came from here, external. So you see that it's breaking like a lot of liquidity. Now what we want to do is we want to start to tighten our stop loss. Now after it broke these three external liquidities and went up here, now we can I mean, we have like a very good risk to reward here. Like we have like 5.5 pips, and here we achieved around 76 pips. So we are talking like 1 to 15, around something like this. So it's enough for this move. 1 to 15, you can just take your profits and relax and wait for another setup. Okay, so this is the idea. Now if we look at this candle, this is at 10. Let's see at 10 what we have. So 10 is the maximum here. So we have to wait. Okay, we have to wait for the 13 candle. So at 13 we can start looking for another setup. So how do? We can just move this here, put at 13, and okay, so now we have another setup. So as you can see, during the first candle we are looking for the low and the high. So this is the high, this was the low, and this was this was the low, the lowest point in this candle, and this was the high. So first it broke the low. What it means that we will be looking to buy because it broke the low. Now as you can see here, it could not break directly above. It tried to attempt to go back, but it did not close above the fair value gap. So we are not buying this candle, this move, this leg here. We are not buying this one. So it went down again and tried up again, and here it closed above the fair value gap. As you can see here, it closed above the fair value gap. Now you can if you want to take like this trade, you can from here. But me personally, if I find that the stop loss is more than 5-6 pips, I prefer to wait for a bullish fair value gap, like in this case here. And when it forms this one, I prefer that it will retest this bullish fair value gap. So as you can see here, now we know that our stop loss is below the bullish lowest point in the bullish fair value gap. So if you are going to buy it here, so it's like 3 pips, 3.5 pips, which is fine. And then we will be letting it run at least to the high, which is here. So it hit the run, it hit the minimum target here, 35. So this is 1 to 10 already. And when it hits this one, we will already we know that this is the minimum. Actually, this is the minimum target. So it should come to at least this level. So because it formed it from the candle here, so we have all this data from before. So now we know that we will be like 3 and then 47. So once it forms at 47, so it formed bullish fair value gaps and closed above this candle. So now we can start to trail our stop loss. So our stop loss would be here, 44 pips. So this is the last bullish fair value gap. So it did hit our stop loss, but it's still like fine. 44 with like 3 pips stop loss. We're still like 1 to 12, 1 to 15, whatever it is. It's just very good risk to reward. So as you can see, this is like a very easy way to trade, but it needs a little bit of practice. Now, of course, if you looked at more, so the last one was at 17. Like, okay, at 17, we can also look to trade, okay, as you can see here. So we can come to 17 and put 17 here, okay. So actually, you know, if it's at 17, we have to put an hour before. So it's like this, 6:16. So if the big move is at, okay, now as you can see here, so this was like the candle. So it's the lowest point is around here, okay, and the highest point was here, so it broke the highest, or here, so it broke here the highest and then came back and formed a bearish fair value gap. So once it forms a bearish fair value gap, as in this case, we can sell. So it went back, tested the fair value gap. Now sometimes it can test like the high of the fair value gap, and this is a 1 minute chart, so it's better to use like the close of the candle. Okay, so as you can see here, it never closed above this the top of the fair value gap. So our stop loss would have been like since it went here, so it would have been like 4 pips, 5 pips, but on a closing basis. And our target is determined from here. So as you can see here, we know our target. We know that we will be looking for liquidity and this. So this was our target. So we will be having like a 5 pips to 51 pips. So this is another 1 to 10 RR. Okay. And you can do this all day. Okay. So this is an idea that you can work on. You find the links under this video if you want to ask any questions in the comments, and have a nice day. Bye.